Afternoon all, how are we all doing? Another Friday afternoon. Woo! Here we go. More news coming. CAD Swiss just hit 125 ADR. Big moves. So lots of movement today. How are we all doing? Amy, afternoon. It's time, Monkey, XRUpdate.news. Top of the morning to you. Afternoon, Virginia. Stefan. So, afternoon, Brian. Mai Tai Friday. That'd be nice. I've got a spin class at 5 o'clock, so I can't do Mai Tais just yet, but afterwards I can. Afternoon, everybody else. Steve, Burke, Martin, Michael. Right, so lots of movement today. ADRs all over the place. So, obviously, it's PMI day, which is always busy. We've had negative PMIs across the board today. US dollar coming up at 245, 15 minutes after the open. So that's the next one this afternoon. Obviously, just because these are all negative doesn't mean these are going to come out negative, but everything's negative. So you never know. We might have a drop on the US dollar this afternoon. Every single piece of negative news we get on the US dollar really tanks it. So we will see. But there's lots and lots of movement going on. So the Aussie dollar CAD, I'm kind of holding on with a couple of trailing stops at the moment on this. We've had a big rally today. We hit ADR straight off of ADR. We've held this low. So I've just put a trailer on this. I've got two aggressive positions on US dollar CAD. Both in profit, obviously. So those two are the ones which are trailing here on this low. So what I'm hoping for is an inside bar to hold up until the news. And then if we can get a positive move off of the US dollar CAD on the news, I think we could easily challenge that high today. So I'm hoping for bullish US dollar news, but we will see what happens. But either way, I'm going to stop out. Probably stop out before the news, I think, anyway, on this. But just bank those and then obviously can add them back on again later. Assuming, of course, the US dollar is able to rally and pull back out of this hideous move. So looking basically just for a retest of that high at the moment. So that low there, that high there, somewhere up there. So tons and tons and tons of these this afternoon. How long we got? 6 minutes. I'll quickly whiz through the ADRs. Some of these are from this morning. Aussie dollar CAD. So there's your ADR hit down there. We've had the reverse alert on M5. Let's go have a look at M5 on everything. So there's your reverse alert off that one. It's just gone in. Aussie dollar Swiss. Reverse alert on that. All the way up there. Look at that. Miles away. So that's 150 ADR. Got a little bit of a gap there. You're not going to get a reversal alert on that. So if you wanted to get into that one today, 150 ADR is a really nice extension. I would just take a break of that high. So that little rally we had there, which is pulling back on at the moment, take a break of that high. If it's going to go off of there, back up into there. That's only ADR. So there's plenty of more room to the upside on that one. Aussie dollar yen. Obviously, the yens have all had a bit of a rally today. This one has just come off of ADR. Again, big rally. Two nice, big, strong moves from the yen at the moment. So we know the yen is due a rally. So it might not be a good idea to start trying to mean revert any of these yen extensions we've got. But up to you. Aussie dollar, US dollar. That's extended. Reversal, that's just gone in straight off of 150 ADR. There. So that's your 150 ADR. There's your reversal alert. Big, strong pushes we've had on these. CAD Swiss. That's an ADR hit to the downside. 125 ADR. You're just about to get a reversal alert on that. Really tight entry. Lots of these today we haven't had reversal alerts on yet, and they're getting really extended because of the speed of these movements. Obviously, the longer they stretch, the faster they snap back when they do. So you could easily look at V-shaped recoveries on a lot of these moves today, depending on what happens with the news at 2:45. I'm not going to get a chance to go through all these, but Swiss yen, that one's already played out off of the news. So Swiss franc, obviously we had that big move down on the European news. That one's recovered. Not really a reversal alert on that one, is there? Euro odd. What a mess today. Huge move on the Australian dollar weakness. Huge move on the European negative numbers. Complete correction. So this euro corrected all of that move. You see a lot of these are euros. Apart from the euro, Swiss. So the Swiss franc a lot stronger than the euro today. Euro pound pulling back. Euro yen, that one's still down. So again, you see the strength of the yen. So all the other euros managed to recover. The yen has held the euro down today, so we know we've got a strong yen. You can see them. There's loads of them. There's no point in going through all of them. It's a big, big day. So there's potential big moves across the board. Euro US dollar, I've just got into a long on this on an H1M5 mean reversion. So this is extended on the hourly. Just taking that bounce there. However, I have just protected that with a break-even stop. Because if this US dollar rallies, if we get positive PMI figures on the US dollar, and we've had all that negative news today on the euro, if we get positive PMIs on the US, this thing's going to come down fast. And the fact that the euro is very weak at the moment and we get some strength coming through on the US, I don't really want to hold along on it because you could be stuck in that for a bit. So that is an entry. However, I'm just protecting it break even because it's in profit. So if that stops out at break even and then flies, so be it. But I'd rather not take the risk on it at the moment. Pound odd, extended to the upside, come off the highs, got 2 minutes to the news. That's really extended. We've got 175 on that. Australian dollar very weak. Pound's had a bit of a rally today, so that's come off of there. So your reverse alert on that one was this morning. Very, very nice. Oh, no, it wasn't. Sorry. I thought that was the pound. No, just about to get it now. Why do they come out and say things like that just before the market opens? Daily's just come out and said, we might have 2 more rate hikes. Not sure. Literally 1 minute before market open. Trying to destroy us. Let me just get this ready. So yeah, anyway, loads of ADR hits across the board. So lots of opportunities. I thought that had already reversed. Maybe I was looking at a different one. Might have been Pound New Zealand. Yeah, Pound New Zealand. So that was the one that we'd already had the reverse alert on. I know one of them had because I just looked at it. So yeah, Pound New Zealand. So that's just had a reverse alert on it. Nice big extension on that one. So lots of opportunities everywhere. Let's just watch the opens. So everything has had a little bit of a drop today. The DAX came down pretty hard. 125 ADR on the DAX. So that gap fill, it certainly didn't go for it, did it? We were looking at this morning, trying to get this gap fill in. Was not interested at all. Right, so no trades on the pre-markets. Let me just check the logs. Yeah, I thought that was going to happen. $432. Third distance to high low is 0. Okay, so I'm just quickly checking the logic on these just to make sure they're working. So the Dow, right? So the Dow, we didn't take any pre-market entries on. So the pre-market 15 is there, but that candle close is at the very, very low. So the reason this new version of the EA is skipping this particular instance is because when you are at the very low of the pre-market 15 or 5 or whatever range you want to pick before the market opens, the chances of you getting slipped are huge. And we saw it, didn't we, a couple of weeks ago? I got slipped basically 2%. So the new version of the EA that I've been working on, basically, if that is the case, it doesn't take a trade. It waits for the open, because that will eliminate the slippage when you're literally closing there. By the time those orders are placed, the market will have gone down there. Your stop will be in the wrong place and you'll be in deep poo-poo. But that pre-market open, if you have bothered to take it, and if you haven't got slipped, and if you did get onto it, beauty on the Dow. NASDAQ pre-market was skipped because the range on the NASDAQ was too small. So the NASDAQ's pre-market range was only 16 pips. That's too small. Again, these tiny little ranges tend to get whipsawed at the open. So, for example, today on the DAX, on the NASDAQ, the reason this trade wasn't taken, as you can see, is your low is there, your high is there. What it's done is it's immediately triggered you into a short, come up, stopped you out. Now you're flipped long. So if this now whipsaws back down into there again, you're just going to get a double-ended stop out. That happens a lot on really tight pre-market ranges. So again, that's skipped. Let me just check the S&P. So the S&P, again, pre-market range is there. The pre-market range is okay from a size perspective, but it's far too close to the lower the range. So again, slippage, just avoiding slippage. So no pre-markets taken. So basically what this version of the EA is now going to do is monitor the 5-minute opening ranges and see if there's any decent size ranges that fall within the criteria for taking an ORB. And the Dow, I think, is probably going to be out of the equation today. So if you did get on the pre-market, though, on the Dow, if you managed to get onto it without getting slipped, you've hit TP on that. It's a nice opening range, but manually you'd have got on that, but you probably would have got slipped on it anyway. But good ranges forming on the NASDAQ and the S&P, though, but no decision direction-wise. So this is the danger of trying to trade the open when you've got news coming out. The market's unwilling to do anything very big or volatile, because in 15 minutes, we're going to find out whether or not the PMI figures are positive or negative, which is going to have an impact on the US dollar, which is obviously going to have an impact on the stock market, because all the stocks are purchased in dollars. So the market's not going to want to put any big rallies in at the open ahead of potentially, obviously, profit-changing news. So we'll monitor those and see how they get on. Come back to them in a minute. News is in 10 minutes. So pound odd, we looked at that one, didn't we? And the pound New Zealand. The other ones we've had hit today on the ADRs are the New Zealand pairs. So New Zealand dollar Swiss, again, because of the Swiss franc, just had a reversal on that one, which is just about to invalidate. So there's a big rally going on. So there's a big drop in the New Zealand dollar, look. So the New Zealand dollar is coming down. So you had a reversal out there on New Zealand dollar, US dollar. Again, big move there. So that will be a propulsion gap on the hourly, look. There's your target. Back up into there. New Zealand dollar yen, we know obviously is coming down. And New Zealand dollar Swiss, again, you'll have a gap there because of the euro news. So that would be your target to the upside. I'd watch this level down here. This is the low from 2 weeks ago. So watch for a bounce at sort of 130 ADR, somewhere around there, back up into there. That would be a really good long opportunity. So that's all your ADRs. Loads of them. Mainly euro-based, obviously, and yen-based, because that's where all the movement has happened today. US dollar CAD hasn't stopped me out. That's good. Euro yen was doing very well. Still is doing okay. So we had the big propulsion gap put in off the back of the euro news, and obviously the yen strength that we've had so far today. We're just pulling back and flagging into there at the moment. So hoping we get a second wind in New York on the yen and see if we can continue some of these yen movements that we've had so far starting. It's starting, but also you can see a lot of these are actually pulling back a little bit as well. So although we have got yen strength, it's not as strong as some of the other currencies out there. So you're looking at things like the Swiss franc. Yeah, you can tell that the Swiss franc is at the moment a lot stronger than the yen. So it is strong, it is starting, but we need to see some follow through. We've had plenty of instances where we've had starts, haven't we? And they haven't managed to actually get the move going. So, but Euro today has helped a lot on a lot of these. So we will see how we get on. Second. Right. Okay, let's have a quick look at the indices. Okay, so pre-market, sorry, why is that not placed as an entry? Couldn't get that on for some reason. I'll have a look at that in a sec. So range is too wide on the Dow, but you could take it if you wanted to. Invalid stop loss or TP for the long. Why would that be invalid? Okay, so NASDAQ range just over the max that I've specified for that, which is 0.2 of an ADR, 20% of its average daily range. It's just done over that. The Dow is way over 20% of its average range. The S&P, though, is within the range, but for some reason it hasn't bothered to take long trades. It couldn't get them on because there's an invalid stop loss or take profit, which is just ADR. So I'm not quite sure why that would be invalid. 200% of quarter of an ADR. Ugh, need to sort that out. Again, that candle, the close of that candle was right as it was about to start to enter those. So I think it's something to do with the fact that price was above where it was trying to place a limit order for some reason. I'm not quite sure why. So I'll have to have a look into that one. Because you can't replicate this sort of stuff in the back test because it just doesn't break. So inside bar on the Dow, kind of looking like it wants an inside bar on the other indices as well. So I think we're just going to sit here for 15 minutes. So the 15-minute range probably today is the one to take if you're going to take an opening range break. So when we're getting just before the news is released at 2:45, see what the range is of the first 15 minutes of the open. That's a good area to bracket, because if they're going to take it away straight away as soon as that news hits, that's where you want to be getting in. Whatever break they take there is probably the direction we're going to head today. So we'll see where we go. Right. RSIs. So there's a few RSI extensions, pretty much the same as we were looking at this morning. So Aussie dollar CAD is extended on the 4 hour below the 20 level now. So that is a really big, strong extension. This is just an A-shaped recovery that we're putting in here. So again, like I said this morning, watch this 150 ADR, which is last month's low. That's where I think we're probably going to get the bounce. Limit orders are going to trigger there. And then we'll see how far back up this range we can get as to whether or not we're going to start a new leg down, or we're just going to pull up and go up to the highs. So that is an ADR reversal. It's an RSI extension on the 4 hour. It's an RSI extension on the hourly as well. So really good opportunity to get into that. If you're taking H1M5 entries, though, there's been multiple entries before that. As you can see, I'm in one there and I'm in one here. So just waiting for some kind of pullback on that move there. So just profit take of some description on that big down leg that they've put in at the moment. So it's a good opportunity for a long. Aussie dollar Swiss coming down hard at the moment based on the Swiss franc strength. So we just filled that big propulsion gap there. We're at 150 ADR. The next real kind of support resistance area is off the back of that balance there. We didn't retest that at all. We just basically screamed straight out the top of it and haven't touched it. So that was a 4-day accumulation there. So again, beyond 225 ADR, filling these 3 propulsion gaps. Once that's done, good looking opportunity for a bounce, but it is extended now. Not extended on the hourly, but it is extended on the 4. Yeah, so down below the 20 level again. So we're just waiting for some kind of pullback on that. This is an interesting one, this Aussie Swiss. I think the Swiss franc should really power up off the back of the weakness that it's had. It's due some strength coming through, really. But we keep having all this negative news coming out on the euro, which isn't helping. So the fact that we're putting in new market structure to the upside on this, potentially we're going to put a new leg into the upside, but that's going to require the Australian dollar to be strong and the euro and the Swiss franc to remain weak. Lagarde says we're putting the rates up at least twice. No reason why we shouldn't be rallying on the euro, which means we'll rally on the Swiss franc, which means this should be coming down. So we'll see, but there's no real directional bias on it at all. Yeah, Aussie dollar Swiss, we're a -4 at the moment, but that's because retail are all longing it. No cop bias whatsoever, and there's nothing fundamentally advantageous for the Aussie and the Swiss. So it's just retail at the moment, causing the movement. So that's Aussie dollar Swiss. It is extended on the hourly only just though. We're about to get a 25 extension on the RSI, so that'd be a good looking opportunity for a long. So you can drop down, wait for the reversal alert, which is going to be miles away by the looks of things. Yeah. So this is the one that's miles away because of this big drop. So that's your 150 ADR, but there you go. That was the entry I just said to take, yeah. The break of that high. That's as good as a reversal alert, really. All you can do on that one, you're not going to get an alert on it. Aussie New Zealand, 2 minutes to the news. So Aussie New Zealand is a 4-hour RSI extension. That's extended and embedded. Again, you know, we know about the Aussie New Zealand, been in it for weeks, out now. Loath to take it long, really am at the moment. I think it's got more of a pullback. So you can see I've got the fib on this one. That's your 50, that's your 38. I think we should at least come and test that 38 level. Have a decent pullback profit take on this. They've been rallying the crap out of this for 4 weeks. They need to take some profit. There's a lot of it as well. So I think we should at least get 38 if we're going to continue that way. It's going to require that to be strong and that to be weak. And there's every chance that could happen. Neither of them have got a real fundamental advantage. They're both doing really bad on inflation figures. They've been too slow on their interest rates. Actually, well, New Zealand hasn't been too slow. New Zealand just has got the biggest interest rate, but it hasn't got on top of inflation at all. So there's no fundamental bias long or short on either of those, so it could go either way. Aussie dollar, US dollar, news is about to come out. Let's just quickly watch the news. I'm just going to watch US dollar CAD because I've got in. Gutted. Stopped out. Watch this fly. So stopped out on that one, unfortunately. Obviously in profit, but I was kind of hoping to keep those on. Okay, news is out. Um, 54.1 off of a 54, positive US. And negative on manufacturing. So it's a miss on manufacturing. Well, they're classing it as an as expected, but it's 0.2 higher than expected. So mixed. No advantage, no disadvantage there, really. It is a little bit negative, so you might find they react badly to that with the US, because every single time we get some news that's negative in any shape or form on the US dollar, it collapses. So we'll watch this. That'll be positive indices. So you would expect to get a break to the upside on the indices. See how they react. So NASDAQ's coming down at the minute. So there's your 15. Why am I zoomed in so far on that? So there's your 15-minute opening range. 15-minute opening range on the Dow is the original 5-minute opening range candle. And there's your 15-minute on the S&P. So NASDAQ is a short, but straight into yesterday's low and ADR. So you're selling straight into support. Not the best thing to do, obviously. S&P is trying to go short, and Dow seems to be trying to go long, but no real reaction anyway. Tricky today, tricky open. It's Friday as well, so might find they just hold it in a rotation for the rest of the day because they're all down the pub. Okay, so a little bit of a rejection on the US dollar CAD. Let's look at the Euro US dollar. So again, Euro US dollar looking like it might want to come down. Pound US dollar negative. US dollar Swiss is pushing. So it looks like it's slightly bullish price action off the back of it. But nothing really exciting either way there. Whole session. Right, let's carry on with the RSIs while we're waiting for the US dollar to decide what it's going to do off the back of that news. So Aussie New Zealand we covered, Aussie dollar US dollar. So that's an ADR hit today. 150 ADR, obviously. So reversal alert on that one has already gone in. So this is your retest now. So potentially second leg starting here. Nice extension to the downside on the hourly. It's nice and embedded today because we've had nothing but strength on that, or weakness rather, on the Aussie dollar on the way down. So again, these for these Aussie dollars really to rally, you're kind of looking at the other one being weak, which we'll see. I'm not too sure about the US dollar. So there is a long on it. It's an H1M5 entry. So you can see the reverse alert's gone in and the entry's gone in already on it. So long on that one, Aussie US. That is extended nicely on the hourly, and obviously the 4 hours just got extended. Euro odd is the inverse, obviously. These are ADRs. A lot of these that we're looking at are going to be ADR extensions because obviously we've had big moves today, which has taken the RSIs extended and the ADRs at the same time, which is why you kind of pick one strategy rather than trading both because you'll get into the same positions. So we've just got Christmas trees on Euro odd. Absolutely no idea where that's going today. Nicely embedded on the 4 hour. Hourly, not quite got an extension on it, but it's really schizophrenic price action on this Euro today. Really doesn't know where it wants to go. That could go anywhere. So I'd leave that one alone. Euro Swiss. So that's a big push to the downside. So again, this is the one we looked at. Market structure looks long. Same as the Aussie Swiss. So it's one of those pairs, the Euro Swiss, where they both move in tandem together. So you get a lot of movement up and down all the time because as one pushes, the other pushes, and it needs one of them to be in control for the market to actually get some traction. And being the Swiss franc, it's usually the Swiss franc that is the dominant one because that's the one that gets the most money pushed into it at once. So it will just rally up and down as the Swiss franc gets money pushed in and out of the Swiss banking system. So it doesn't really matter which way you get into this one. Just wait for an extension. So there was a short on the 4 hour, which is obviously all played out and your profit now. On the hourly, we're just about to get an alert on the hourly, potentially for a long opportunity. So just looking at levels on this, you've got this area down here in this propulsion gap of that accumulation, which has already been tested once. So 175 ADR would be a nice place to buy it from, but it looks like it's probably going to go back up into there before that. So, but that is a 4 hour RSI extension. There's no entry on the hourly at the moment. It's only the 4 hourly, and that was a short. That's already played out. And that's an extension on the hourly. Hang on. Oh, yeah. Sorry. Yeah. It's under the 30. It's not under the 25. Pound odd. So pound odd, just going to sell on that. Big extension, obviously, today. Huge push on this one because we had the Australian dollar collapsing and we've had that strength finally coming through on the pound after the positive news we've had, although it's not particularly dramatic. But we're coming straight back up into this accumulation break here with this propulsion gap, which they've just tested and they've hammered that. So looking for a push back down into here or here. from where we are. So, target on that one. That's roughly 0.5%, half an ADR. So 125, somewhere down there, would be a good target for the short on that pound odd. Pound New Zealand is extended on the 4 hour. So nice rejection at the high there. So that's yesterday's high. Sorry, previous day's high. So yeah, very nice extension up at 125 ADR. Nice rejection. Again, we need the New Zealand dollar to power up, really. This pound should really be rallying very hard off the back of the CPI figures being positive and the interest rates being positive. We just haven't seen it yet. So this move that we've got today is potentially the start of the pound coming to life. But it doesn't look to me, when you look at it across the board, it doesn't look to me particularly strong at all. So if you go on what we've had from all the other currencies that have had positive interest rate rises lately, like the Aussie, the Euro, etc., and the Swiss franc, they're not going up. They're coming down on the interest rate rises. So just be very careful with the pound, because we've had nothing but positive news, and it's acting exactly the same as the US dollar. Positive news does very little. Negative news collapses it. So I think we just need to be, you need to have your wits about you a little bit at the moment and be a bit nimble getting in and out of the market, because it's impossible to pick a direction. But fundamentally, this is a long at the moment. So pound US dollar, that's extended. Oh, sorry, why am I looking at the pound US dollar? Pound odd, wasn't it? Whizzing through all the pairs. Yeah, so pound odd obviously is extended on the 4 hour and extended on the hourly. So nice entry short. Just looking for a profit take on that move there, if it's going to put another leg in. Pound New Zealand, we looked at that one. We've just had the reversal alert on that one this morning, just this afternoon. So that was your entry there. Still in it. Again, pound not particularly strong. New Zealand's been weak with the Australian dollar, hence we've had that big rally. So you can get into this one any direction you like at the moment. Just up and down all over the place, so it doesn't really matter. Just wait for extensions. Hourly, we haven't got one. 4 hourly, we haven't got one either. Why are we looking at that one? Extended on the hourly. Oh yeah, sorry, it's over the 70. Was over the 70. But obviously it's come down. But that was an ADR reversal as well. So either or, hourly RSI extension, M5 entry, or the ADR reversal. Either strategy triggered the entry on that one. New Zealand dollar CAD. It's a 4 hour extension to the downside. Canadian dollar, very, very weak. So if we get some strength on this Canadian dollar, we're going to be dropping out the lows. But if you look at where the oil price has gone today, we got almost down there. Look. So we filled that propulsion gap that we used as support last time. So that's a support bounce there, rejection. So again, perfect spot to buy. If I was going to take this, I'm not going to take this because I'm not taking oil again. I've just made a load of money out of it, and I'm not going to let it take it back. That was the entry that I took previously in here, off this bounce point, obviously there. So it's very, 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 very obvious support. Everybody's seeing it. So they've just filled that propulsion gap. So if you're going to get into this, if you want to take this long, bear in mind that was the target. We didn't reach it, somewhere up there. So if this is just going to stay range bound, this is a perfect spot to get in. It may well go from here. If it doesn't go from here, you've got the opportunity for them to retest this level and take a second entry there and go for it. Yeah. So if you get in there, it doesn't work out. If you wait for a test of that level and some bullish price action there, so a reversal alert on M5 or something down here, that'll bring your average price on those two positions down to there and take that trade. Yeah. So it's the sort of trade you can take if you look at it on the hourly. So that's the entry that I took previously a couple of weeks ago. Yeah. That I got out of yesterday. So get in here. Yeah, we just had a reversal alert. M5. Oh no, we haven't. We're just about, oh yeah, right, perfect. So when you get that reversal alert on M5, take that as your first entry. If that doesn't work, this is massive support. This is weekly and monthly support and ADR. So take an entry there. That doesn't work. If they test that area and you get a second reverse alert, take another entry. You'll have a nice little average there to jump up into the highs. Good looking trade. So entry, stop somewhere about 125 ADR or just under. Give it time to come down and try and test that level. Take a second entry, stop in the same place. You'll either get stopped out or you're going to get a range bound trade. And if the range bound trade happens, you're going to get something around 4 to 6 R. Way back up to there. So it's a good little trade, isn't it? So the reason I was looking at that was because we were looking at New Zealand dollar CAD. Oil prices potentially set to rise if we do hold that range, which will strengthen the Canadian dollar, which will push it down into there. That's where you want to kind of take along, I think. So again, same as the Aussie dollar. Yeah, A-shaped recovery, push back up again. But that's only extended on the 4 hour. So you can see that that's the last entry that I had out of this one. That was an hourly RSI extension. Again, New Zealand dollar. Potentially we could come back up and retest that propulsion gap. We probably will. Big ones like that, especially when it should have been bullish New Zealand, because that was a positive interest rate rise, yeah? Especially when they should be bullish. There's a good chance you're going to get that retested. Aussie New Zealand, weekly range has just hit. Jumped ship way too early on that. Still coming down. New Zealand dollar, US dollar, extended on the hourly. So just about pulling off of ADR as well. Propulsion gap fill. Yeah, so that is the best area. Yeah, that whole area there. This propulsion gap. It's a monthly level, it's a weekly level, it's 125 ADR, it's old support, old resistance, spot on. So if you do get down to there today, 125 ADR, that'd be a lovely trade back up into there. Should have a lot of buyers there, if it gets there. But it is extended. M5 reversal alert's already gone in today, and you're retesting. So if you've missed it, potentially you could get in now and assume this is a retest. If it is, brilliant. If it's not, 125 ADR will be a second entry on it. US dollar yen. Wow. Okay, so the US dollar is rallying. Gutted. Look at that. So we are getting a rally off the US dollar off the back of those negative numbers. Again, nothing makes sense, does it? So they've decided to stop me out, and then obviously off they go. So that's fine. I've still got positions on it, long. Yeah, undecided really on this US dollar off the back of that. We've tried to go lower. We're rejecting and pushing higher. US dollar Swiss, as you can see, is pushing higher. Aussie New Zealand's hit ADR. US dollar yen is pushing up. So the yen looks like it's weakening. Then pound strength weakening the yen. Sorry, dollar strength weakening the yen this time. It's yen really, really getting hammered again. They do not like it, do they? We'll see what happens next week. So I would imagine over the weekend we'll get some more noise coming out of Japan about the potential for an intervention. May or may not happen. It's all going to depend on obviously what they do, whether they continue to rally this yen. Sorry, bear with me. Yeah, there you go. So that's all your RSIs and your ADRs. Very, very, very whippy open today. So your Dow ORB is long on the 5 minute. Your ORB on the NASDAQ is short. Your ORB on the S&P is complete chop fest. It's Friday. Need to do some analysis on days of week. See if Fridays are the nightmares. Okay, so the DAX as well. I just wanted to cover this one as well. So we've now got these multiple gap targets to the upside on the DAX. Lots of them. So next week, we're looking at targeting the gaps that we've left behind. Touch and go, that one. But we've got this whacking great one now today as well. So we've pushed down into 125 ADR. We were looking this morning at that being your break and retest for the gap fill. They did do the break. They didn't manage to hold it. So longs next week, we got targets galore to the upside on the DAX. But it is slightly worrying the fact that all these indices are really selling off at the moment. This bull market that was potentially starting again. Somebody mentioned in the Telegram group today about one of the set files I've got for the market reversal alerts EA, which is for trading the S&P 500, which is, it only works in a bull market, which is what the S&P spends the vast majority of its time in bull calm. This is where I'm thinking we might be getting back into that nice bull calm regime and ready to buy the pullbacks. But market's really dropping at the moment across the board. So it's quite difficult, especially with when you look at something like the Dow, hasn't managed to make new highs. Yeah, we have had lower highs put in, acted as resistance. Yeah, so we had this level here. We tried to rally above it. We couldn't. We had a real good strong push above it. Sellers stepped in. Buyers tried again. Sellers dropped it. Buyers tried again. Sellers dropped it. New lows. Tried to make new highs. Failed. Yeah, this market can't get going. So the problem with what normally happens on indices are all manufactured to make money. So they're measuring stock prices. Stock prices are engineered to go higher to please shareholders. So as long as businesses are constantly making a profit or increasing their profit, which is what businesses do all the time, the stock market will rise, which is why you see things like the S&P just going up forever. And they will continue to go up forever. The S&P prices will just keep going up and up and up and up and up, because as long as businesses are making money, stock prices get higher. As long as inflation happens, the world makes more money, everything goes up. You know, we were buying houses for 20,000 30, 40 years ago. We're now buying them for 200,000-300,000. In 30 years' time, house prices will be 500 to 1 million as a normal starting price. It's just the way the world goes. So this was the recovery that we had from COVID. This was the bear market that we went into because the recovery was not substantiated, because stock prices were going up when businesses were making less profit. Crazy, couldn't be sustained, caused that crash. We're looking for the market to get back into, not that steep, but get back into this normal bull calm regime that we spend most of our time in. That's what I'm looking for. However, we're not able to really get going. And the problem with inflation at the moment and interest rates throughout the world is when you get high interest rates, you cause housing market crashes, you cause unemployment. And we are at the point now where we've got, in the UK, for example, there's 1.5 million households coming out of fixed rate mortgages in the next few months. They can't afford it. I did the calculations on my mortgage this morning, right? Because I'm in a fixed rate for 5 years. And I wanted to know what the difference is going to be. So my mortgage is 1.77%. That's what I'm paying. That's what I fixed it at. When I fixed it, interest rates were 0.25. Interest rates in the UK are now 5. So my mortgage now has gone up by £2,000 a month. So if I was to remortgage now, as opposed to what I remortgaged at then, a year or 2 years ago, I would be paying £2,000 more. That's double, more than double what my mortgage payments are. That's the problem we're going to have. If that happens, what's going to happen to all sectors, not just banking and service sectors, but all sectors, is they will come down. Businesses will suffer. And that's where I think we are headed. And this is why people were calling this as a test for the S&P pre-COVID levels. We haven't tested them. The market tried to rally from that level. We haven't hit it. I think this is the start of a down leg, in which case we should be seeing the US dollar rise, because we should be getting higher interest rates on the US dollar. But Why was I talking about that? Something to do with the S&P, yeah. So the set file that I have for the Market Reversal Alerts EA on the blog trades in this market condition. And it's kind of my pension, if you like. It's the same strategy, if you like, that Warren Buffett uses. Literally, the S&P rallies 80% of the time, and it has pullbacks. You buy the pullbacks. And as long as the world continues to tick over as it does, you'll be fine. You get the odd crash, which causes high drawdown. You wouldn't survive COVID. This isn't where it works. So I turned off the EA down here and haven't had it back on since. I'm ready to turn it back on because it looks like we're entering back into a bull market. But this last week, we've seen everything coming down fast and hard again, haven't we? So the DAX, with all these gaps to the upside, is potentially what I will use as my gauge as to whether or not we're getting back into this bull market, because these gaps all need to be filled if we're going to go back into a bull market. We're back in the 2472 zone, which is where we would look to buy dips. That's what the EA set file does. You can see all the old gaps that you have in the market, they all get filled. That's what it does. It fills gaps. If ever you get one, they get filled. So next week is critical. If we do get that rally and we challenge new highs on the DAX over the next week or two, it might be the start of a bull rally. But I want to see things like the Dow breaking new highs and making new highs. At the moment, it's struggling. We can't get higher. We're stuck. Everything's stuck. The economies are stuck. Everything's in recession, or not going into recession, but possibly going into recession. Yeah, everything's screwed, basically. So all the time we've got this condition in the stock market, we're going to have similar conditions in the FX market, whereas we're not going to have biases very much on anything, which is what we've seen for the last month, which typically is pretty conducive to position trading because everything tends to go more into ranges and big pushes and big pullbacks. But as we've seen, there's been a few squeezes lately where we've had unexpected results. So very tricky at the minute across the board. Has anybody got any other pairs they want to have a look at? Because there's nothing much else to really look at today. Lots of opportunities. That buy's holding up on the euro US dollar. Is that coming down again? Yeah, see, US dollar's coming down again. I don't think we're going to get any direction today. I don't think anything's going to move today. I think we've had the movement today. Summer solstice theory. Aliens landing probably wouldn't be a bad thing at the moment. Might take the focus off the rest of the world. Afternoon, Neo. Closed 80% of the EU this morning. Left a runner to see what happens. Yeah, so tricky one that. That was a very good trade. I'm surprised you held on to 80% of it, to be honest. It was a good one. Sell in May and go away. Yeah, pretty much. It's more like June at the moment. June, July. It will calm down. Next month will calm down. That's the other thing that's worrying about the stock markets. We're going into summer trading, and it enters a period of low volatility. So it becomes an awful lot more difficult to make money in the summer. Euro New Zealand is going down. Yeah. This euro potentially after this morning's news is going to suffer. So the next news we've got coming up on the euro is we've got the CPI figures the week after next. Got the German CPI. Nothing much coming up until the proper CPI figures, basically. Yeah, there's no news catalyst for the euro coming up. So all this negative news that we've had today across all the European sector and the pound as well, doesn't bode well. So we're in the same situation with the US and the euro at the moment, whereas it's down to Powell and Lagarde to rally the market, because the market's got no real faith in anything. All the time we're sitting there going, what's the terminal rate going to be? What's the terminal rate going to be? The market's not going to want to commit an awful lot of money into one direction for any sustained period of time. So I think we're getting to a really tricky trading state now. 4.5 is the current terminal estimate. Terminal estimate this morning on the pound went up to 6.25. We're sitting on 5, so that's 1.25 over the next 6 months. They're expecting interest rates to go up to. If you're a homeowner like I am in the UK with a mortgage, that is scary shit. Really is. It's a case of my mortgage comes up for renewal in 2027. 2026, hopefully, interest rates will have started to come down. I put a post in the Telegram group today. In the 1970s, this is exactly how the 1970s housing bubble first started. Yeah, they started with 3 to 5%. Then they got up to 7. Then they got up to 8. By the end of it, they got up to 15%. You couldn't afford a mortgage at 15%. No one could. The housing market collapsed. This is exactly how it started. We haven't had one for 30 years, 40 years. Proper collapse. In the 90s, we got up to 7%. We're at 5. I'm talking about the UK here, but the rest of the world will do exactly the same thing. So someone's got to pay for COVID. Someone's got to pay for all of this money that was made in the stock market while all these companies were losing money. Yeah. Everybody was losing money. Yet the stock prices continued to rally at the fastest rate they've ever had. This is why we're in this mess at the moment. There's a load of people made an absolute fortune in there while all businesses were failing. Unemployment rate suddenly flies up. Inflation flies up because everybody got greedy. It's all caused by this because we didn't know how to handle it. Why would we? We've never had a pandemic before. But yeah, scary times. Scary times if you own a house. Scary times if you've got savings. Scary times if you've got a pension. Scary times if you've got a job. Scary times if you aren't friends with Russia or China. Pound yen. Sorry to put doom and gloom on a Friday afternoon, but need a reason to go and have a pint, don't you? Pound yen. Go and drink away your sorrows and moan at everybody in the pub about how the world is going down the pan. Always a good thing to do on a Friday afternoon. Pound yen is stuck at the highs, so we're waiting for some yen intervention at the moment. Still, so pound specifically is really stuck. You can see the volatility that we've had today off this pound. This should have flown yesterday. Should have flown, properly flown as well. Yeah, we went up by 0.25%, unexpected, off the back of high inflation figures. Double bull day. We had a bull day there. We had a bull day there. What did we do? Nothing. What have we done today? Nothing. Yeah, this is not normal. So I get the feeling the market is scared anyway of rallying against the yen at the moment because they know damn well that they're going to get hit. But sure, I'm shorting it at the moment. I'm shorting it on my account at the moment. Waiting. Still waiting. So this is kind of, if you look at the rally that we had, that movement, and then go and look at Aussie, New Zealand, this is what tends to often happen before a collapse. So you get the rally, which goes on, and then you get the sideways movement, and then you get the correction start. So all these yen pairs, well, a lot of these yen pairs, not all of them, but a lot of these yen pairs, same characteristic. Yeah. So you rally, accumulate, profit take. It's either that or you get the immediate pullback long. So this is kind of what we would expect to see before a correction across all the yen pairs. All doing the same. Canadian dollar's obviously rallying a bit more, and that means oil's probably coming back up again. It's obviously pulled off the lows, but so yeah, all the yens basically the same. Looking for some strength, basically. Still, Do you have the same sympathy for fixed income savers who have been subsidizing mortgage payers for years? Yeah. I don't have sympathy for anybody. Everybody's in their own, every person for themselves. I mean, it's nobody's fault, any of this, is it? You can't win. If you save money, basically, at the moment, interest rates going up should make you richer. If you've been saving money and over the last 10, 15 years and haven't been getting much for it, now is when you should be getting it. Unfortunately, the banks have decided to put your mortgages up, but they haven't decided to put up the money they give to savers. So pension funds are suffering badly. So our pensions are at risk. Everything's at risk, basically, isn't it? Our pensions are at risk. Our houses are at risk. Our jobs are at risk. AI is taking people's jobs away. Yeah, companies, because of inflation, are finding it hard to put prices up because people can't afford things. However, all their costs are going up. So what do they get rid of? Staff. Staff causes pressure on central governments to pay out in assistance, which causes inflation to rally and everything to go wrong. It's just we're in this spiral and the market doesn't seem to have any clue how to get out of it. The banks don't know. Central governments don't know. All we're doing is we're currently sitting on this train and it's going very fast, but we've got no idea where it's going to end up. And obviously, at any point, if an accidental rocket flies into a NATO country, World War III is going to start. So, yeah. That's a cheery Friday afternoon for you. But hey, tell it like it is. But from a market perspective, it's virtually impossible at the moment, as you can see, to tell where anything is going to go. It is literally doing what the hell it likes. And it's based on bank movement, obviously. And it's really dependent on which way the banks are positioned when this news is coming out. We're getting totally inverse reactions to news. Look at the euro. I mean, Christ, that was a positive interest rate rise. It just doesn't make sense, does it? You know, you just don't get... Sorry, that's not there. It's there. That was a positive interest rate rise. It just doesn't happen normally. It's good for a currency. Has been good for a currency forever. Decades. Wage price spiral, as Brian's just said. Yeah. We are stuck. And, you know, and this is why... This is all, as I said, this is all interlinked. Yeah, everything that happens there affects that because it's affected by businesses. You know, interest rates go up to get on top of that. That causes that to go up. That going up causes that to go up, which means I've got to push that up more, which pushes that down, which pushes that up. Yeah, it's an impossible balance at the moment we have, because we've got too much going on in the world for them to actually get a balance, and everything's running away. You know, we were talking about 4.5 terminal rates a quarter ago. We're now talking about 6.25 terminal rates. It's that fast. In 3 months, we've decided actually, no, it's going to be 1.5% more than we thought it was. Holy crap. If it carries on going on like that, in a year's time, you'll be sitting on 10% interest rates and there's absolutely no hope of getting a mortgage. By then, it won't matter because your house will have gone down half in price anyway, and you'll have lost your job. Hence, being a trader, if you work for yourself, it doesn't matter, does it? Prop firms are going to make a lot of money, aren't they? Everyone is going to be looking for a way to make money. The Lambo course sellers are going to be well in. Feel better now. Cheer up. It's Poets Day. Exactly. I should become a poet. Right, I'm going to leave it there because I haven't got a lot else to talk about. This yen is continuing to rally at the moment off the back of this US move. The Swiss franc is obviously off the charts at the moment, which is great. Again, safe haven rally on the Swiss. So the money moves into the Swiss franc. The Swiss franc should be tanking with the euro. Swiss franc's going up, which means they're moving money into safe haven, which is possibly a precursor to what the yen is going to do, because when the yen comes down, everything else, or rather when the yen goes up, everything else is going to come down. They're going to need to take that money out and put it somewhere. Swiss franc is usually where it goes. So or either that or the yen, obviously. So we'll see what happens on Monday, but a lot of these moves that we've had today seem to be starting to unfold a little bit. So tricky. I can remember when mortgages were 15%. Yeah, exactly. Yeah, this is the danger, isn't it? I remember when I was a kid, my mum, we lived with my grandparents for 5 years because my mum couldn't get a mortgage. It was physically impossible. She couldn't afford a house because there was no one out there that would lend money. And if they were willing to lend money, you couldn't afford it because it was more than your salary to actually buy a house, get a mortgage on a house. So the way things are going, especially with the US, as I say, the US is one of the, it always happens here. The US is the first. It's always the US first. Then it tends to roll over into the rest of the UK and Europe and then the rest of the world. It's always these guys that go wrong first. Their interest rates are at 5.25 and they can never tell us anything but it's going up. And exactly what we've just had today. Look. There you go. Traders move back 6.25% peak to year end from February. So they're basically saying 6.25 terminal rate on the pound. Then we've had Fed's daily coming out. 2 more rate hikes is only a projection. We don't know for sure. Could be 4, could be 5, could be 10. We don't know. But it's certainly going to be 2. 2 more rate hikes this year are a very reasonable projection. We're on 5.25. That's 5.75%. They never go in anything less than quarters. So best case scenario is 5.75% on the US dollar by the end of this year. Strongly supported June decision to stand pat on rates and watch the data. It's prudent to slow the pace of policy tightening as the destination nears. They keep changing the destination. It's like moving the goalposts, isn't it? Here's the goalpost. You ready to kick the ball? Yep, brilliant. Okay, we'll move them over here. What they do all the time because they haven't got a clue how to get out of this thing until they basically go bankrupt. When they go bankrupt, the rest of the world is just going to cascade with it. So long and the short of it is you want to be selling everything because everything is going to go down. But then again, which do you sell? Something's got to be stronger than the other, isn't it? If you're going to sell something, there's got to be something else which is going the other way. So it's trying to pick the currency at the moment, which is the one that is going to come out of all of this the best. And it's very hard to pick that, isn't it? So we'll get there. We'll get there at some point. Prop firm EA will sell well. Yeah. How do you develop a prop firm EA in a market which is changing so fast that you can't predict anything? Well, you never can predict anything, obviously, as we know. But how do you develop a strategy for a market condition we haven't traded in before? The best thing to do, I reckon, is to go back and look at the 1970s. See what happened to the market in the 1970s when interest rates went through the roof. There'll be websites out there. There'll be a chart somewhere which will tell you. Not there. But there'll be a chart somewhere that will tell you what basically happened when the last movement happened. There's a video on stagflation there. Look, there you go. Right, that's interesting. See, this again is a different situation, isn't it? That's what happened to the crude oil price when the interest rates went up. Yeah, $100 a barrel. We're already here, aren't we? We're already there. But demand for oil now is totally different to the 1970s. Half of us got electric cars. Core inflation there, 1980 peaked at 12.4. GDP collapsed through the floor. Again, recession. That's what we're looking at. That's what we're talking about all the time. Fed fund rate up at 19%. what you want to see is what happened to the FX market for the US dollar, because that's the key thing. Once we know what's going on with the US dollar, we can figure out what's going on with everything else, can't we? So, homework. Something to do over the weekend. Right, I'm going to leave it there. I'll be back on Monday. We'll see how we get on Monday, see what the market's up to, usual, and see if the DAX can get a rally next week. That should be good. Brian, I honestly think they have an interest rate slot machine at the Fed. Powell pulls the lever, and that's the rate. I think whoever Powell pays, basically, is what you get. If Powell wants X, he gets X. If you don't disagree with him, he pays you. Not saying that happens. I would do. We're allowing you to come up with a cunning strategy like buy 5 props, 1 every 2 weeks, and put a prop firm EA on them. As you keep reminding us, you don't need to pass every prop, just 1 in 5-ish. Exactly, yeah. Best thing to do is to have multiple strategies. Yeah, if you got 5 strategies, all different. 1 trend, 1 intraday mean reversion, 1 hourly mean reversion, 1 daily breakout, 1 scalping at the open. Yeah, if you've got 5 different strategies running, you put them on 5 different prop firms on the same week, one of them is going to pass. Because if the market goes into a trend, the trend one's going to kill it. I don't know who you are. Probably a broker. So yeah, if you have 5 completely different strategies running at the same time, one of them is pretty guaranteed to pass, because if they are all opposing strategies or all have completely different views on what happens, typically, as long as you don't get something that just goes like that for 2 weeks, you're going to pass something, aren't you? So there's always a way. You just got to adapt. Right. I'll leave it there. Anything you need, let me know. I'll be in the Telegram group. Back on Monday, 7:50, same time. Back on 2:20 on Monday as well for the New York session. News-wise, just be aware of news. There's nothing this weekend. We're going straight into quiet Monday. So there's no news Monday. It's just talking heads. First thing is CPI on the Canadian dollar on the Tuesday. So it's all CPIs next week, look, across the board. So it's going to be busy because it's interest rates and inflation again. So we'll see what happens. But nothing to worry about over the weekend. All right, so have a good one. Go and have a drink and forget about the markets. Always good. I will see you on Monday. Have a good weekend.